RTHK Radio 3.
Coming up to 16 minutes past 6 in the afternoon, in the evening, that is the time. This is the close on RTHK Radio 3. And finally, today, we'll be looking at how tokenized real-world assets are being used by traditional financial institutions.
The government here recently released its Policy Statement 2.0 on the development of digital assets in Hong Kong, in which plans to support the expansion of real-world asset tokenization were outlined. To dive into what you need to know about these moves, I'm joined by Jakob, who is CEO and co-founder of Clearpool, which is a platform that connects financial institutions to blockchain-based lending markets. It's lovely to have you in the studio again.
Thank you, Caroline. It's a pleasure to be here.
So maybe you can start off by explaining to anyone who doesn't know what they are, what exactly are tokenized real-world assets?
So tokenizing means creating digital tokens on the blockchain, which then represent your ownership and rights to a certain real-world asset. Now, what is a real-world asset? That term is, I think, quite confusing, and maybe at some point we should get a different term in our industry.
Yeah.
But, our industry started off with creating this very, not real, purely digital tokens like Bitcoin and Ethereum. So those are crypto native assets. And then everything else that is also present in the real world, those are real world assets. So those are regular assets that you'll be familiar with. It can be physical assets such as real estate or art or cash, or it can be non-tangible assets, but like financial products such as stocks and bonds. Now, if you're tokenizing those assets, you basically put them on the blockchain. The blockchain is just a universal ledger that is verified by a bunch of computers, and therefore it's immutable. You can think of it as like an accounting book that basically everyone has inside, everyone needs to verify, and therefore it always speaks the ultimate truth. So once you put those assets on the blockchain, they become a little bit like Lego blocks. Even though they might look different, they're compatible with each other, and you can move them around easier, versus currently all those different assets have very different siloed places where they're currently available.
Now let's delve a little bit more into this whole blockchain world and what we are seeing in terms of the sort of traditional finance industry moving towards adopting it and helping to use these sort of immutable aspects of it that make it such a good way of recording transactions.
We saw that, so these tokenized real-world assets, right, the concept is very old already, right? It started around 2015, 2016. There have been a lot of experimentation, but only recently, I would say, it really, really took off. One of the reasons is definitely that there is more regulatory clarity in a lot of different jurisdictions. Also here in Hong Kong. Hong Kong is very much at the forefront of this. Singapore as well, Europe as well, and especially the United States with the new Trump administration has been put forward a lot of more favorable legislation surrounding digital assets and tokenization. And the broad way that they all kind of approach it is same assets, same rules. So just because something is on the blockchain, the rules do not change. It's still going to be treated just like any other asset or security.
And what do you think has been sort of the tipping point from going from that sort of 2015 when you said this sort of concept was first mentioned to people getting really interested in it?
So when it comes to the tokenization of real-world assets, I think there has been, over the past couple of years, quite a lot of large financial institutions that basically got involved. I would say the largest and one of the most prominent one that has the most traction is maybe BlackRock, the largest asset manager in the world, that issued a tokenized money market fund called BIDO. And that one really actually has quite a lot of adoption. So it's currently sitting at $3 billion in value. And then recently, Robinhood, one of the largest, consumer-facing finance platform with millions of retail users, announced that they're going to launch tokenized stocks, both public stocks and private stocks, and distribute this and offer this to all of their users. So that's definitely a lot has been happening. And I think the other big catalyst is our stable coins. So stable coins, for anyone that doesn't know what a stable coin is just a digital representation of $1. So it's cash on the blockchain. So it's the biggest real world asset. And, stable coins made it very easy to move money around. So, for example, I am sending funds home to Italy, where I'm from, right? I can simply send 10 USDT, that's the largest stable coin, And, my parents, for example, they could receive a euro stablecoin. And this all happens with a one transaction.
Right.
In 1 second with hardly any costs. This stands in contrast to the traditional banking rails, like the SWIFT rails, where if I would send money, it would take probably like 3 to 5 days. If I'm lucky and it actually arrives and there isn't anything that makes it bounce. And then they would also charge me an arm and a leg on the FX rates.
Yeah.
And there is like 5 counterparties involved. The key thing with a stable coin and with blockchain rails is there is instant settlement and that no intermediaries need to be involved. So something as simple means that, this blockchain can actually replace the traditional banking stack that we have. The key thing here is there's more and more like networking effects that are realizing once everything moves onto the blockchain, right? If only I send you money and you need to use that money by off-ramping it into the regular hard currency, then there's still going to be quite a lot of costs involved. But the moment that we move that whole stack onto the blockchain, it becomes very easy to move in and out of different currencies and in and out of different assets, such as stocks, bonds, potentially even real estate in the future. So that's a little bit the vision that we're having. And I think this is the vision that a lot of countries, technology companies, and financial institutions are also waking up to. And that's why, we see there's a lot of movements. Right, a lot of countries, they don't want to fall behind.
Right. So they're going for putting regulations in place and optimizing this.
Correct. And also Hong Kong has just published their guidelines for stablecoin regulations. Yeah. So hopefully we'll also have a Hong Kong dollar stablecoin very soon. I think China is even discussing their own stablecoin as well. Europe has their own stablecoin. Currently, this is still very much a US dollar dominated reality, with over 99% of all stablecoins being US dollar denominated stablecoins. But I think other countries, also woke up to this and realized, hey, we got to get our own stablecoins out there. Otherwise, the US dollar is becoming even stronger with this movement.
As that sort of global reserve type of a thing, almost, where everyone talks about everything related to dollars. So
Correct.
You mentioned how, the Hong Kong government has been so forward on this. Let's talk a little bit more about why you think it is that the government here has been supporting tokenization so much. Is it to help businesses? Is it partly to help investors? Is it to open markets up a little bit more, actually?
Yeah, so I think it's pretty clear that this is one of the major technology trends, especially when it comes to financial technology. And this is why a place like Hong Kong, similar to a place like Singapore, obviously does not want to fall behind. And Hong Kong has actually put forward a very comprehensive and clear legislation and guideline on digital assets and stable coins. And with that, Hong Kong is actually right now well positioned to become, a global leader in this space. Definitely Hong Kong being one of the major finance hubs. Obviously, it also makes sense that Hong Kong becomes a major digital asset hub.
Do you think it does open things up more for the average investor? You were talking about how it's become much more simple for you to, say, send some money home to your folks in Italy. But is it also opening up certain investment products to people who might not have been able to get that access to them before?
Yeah, so I think there is there's definitely a bit of a differentiation between, those financial products and the access. Let's put it like that, right? I think the stable coin also gave a lot of people access to the US dollar. Now, I would say it definitely opened up and brought a huge opportunity to people in countries that had a weak currency, such as maybe, some of the South American countries, right? They're now able to hold stable coin versus their currency that's been devaluating like over time, and they're able to, access US saving products and US stocks. I would argue in Hong Kong, we've been quite lucky that, first of all, the Hong Kong dollar is pegged to the US dollar.
We're already almost kind of a stable coin.
And then I think, everyone in Hong Kong probably has a brokerage account, right? It's one of the most, trading and investor savvy population. Also when it comes to regular users. So, access to U.S. stocks has not been a problem, I would say, in Hong Kong. So, it really, when it comes to tokenization of real world assets in places like Hong Kong, it's less about access for the people, but it's more about just having a better stack, being able to transact outside of U.S. hours, for example, with the tokenization of stocks, being able to access certain financial products with smaller minimal investment, and in the future being able to transact and move those different assets around in a more efficient way. So I wouldn't say it completely revolutionizes the way that people interact with financial products. A stock's still going to be a stock. People are still going to buy Tesla stock. What's happening right now is just that the rails are being replaced and are changing, and those new rails are going to be a lot better, and there's going to be a lot of advantages. But overall, the world is not going to change
It's
because
not a complete shift.
it's the same products and the same rules basically that still apply, right? So I would say there is definitely like a bit of a big differentiation between real world assets and tokenization of real world assets, and then those fully decentralized crypto assets,
Absolutely.
such as Bitcoin and a couple of others.
Well, it's been brilliant to speak to you today. Jakob Kromblickler, who is CEO and co-founder of Clearpool.
Thank you very much for having me.
Radio 3.